That's a potential almost double right there just to get to the top of their trading range. All right, welcome to Talking Investing. I am Tom. This is not financial advice. This is a channel where we talk about all things investing, and today I want to talk to you about a company named Workhorse, stock ticker WKHS. I want to take a look at who they are, what they've been doing as it pertains to sales and production, what I think they should be doing on a going forward basis. We'll take a quick look at the chart. I want to talk about the short interest in the stock, and then we'll talk valuation and maybe price prediction. What I really want to focus on is where this company's at and what they need to do to get to the finish line. I think this company has a huge upside potential. So let's dive in and figure out who these guys are. So if we take a look at their website, this is their main product line. This is the C series vehicles, the C650 and the C1000. These are last mile delivery vehicles. C650 and C1000 step vans set a new standard in design and efficiency for the last mile delivery segment with its 650 cubic foot and 1,000 cubic foot vehicles, both weighing approximately 12,500 pounds fully loaded. Their potential customers, most notably a very high profile customer they didn't get, was the U.S. Postal Service. So this is the type of last mile delivery stuff. The Postal Service, Federal Express, UPS, lots of private organizations that have their own fleets that deliver. The last mile delivery market is a gigantic market. I've seen many different estimates. Some put it at about $50 billion. I've seen predictions up to, over the next decade, turning into a $100 billion business. So this gets me to the first thing that has kind of consumed this company. They had a potentially gigantic contract with the United States Postal Service. So I believe it was somewhere in the range of, $400 or $500 million to begin with, which was part of a larger contract for $6 billion and 165,000 vehicles. So that is enormous, especially later when we take a look at what these guys are doing right now. This would scale them up in a way that they need. Let's look at what happened there. Most recently, and this was on June 16th, so this was over a month ago. Today's July 22nd. Workhorse issued a press release that said they announced today that it has filed a formal complaint with the United States Federal Court of Claims protesting the award of the United States Postal Service Next Generation Delivery Vehicles contract to a competing finalist. They're protesting the contract. It was awarded to the competition. They're in litigation now to try to see if they can get it back. And that's fine. I think, management has an obligation to pursue any potential revenue that they can. This is an enormous contract. So I have no issues with them going after this contract and pursuing it. What has happened, in my opinion, though, is this contract has now defined this company. They can be so much more than this, and they need to be so much more than this if they want to be a successful company going forward. They need a diverse customer base. The U.S., while this is, the United States Postal Service is a massive potential customer, but no company can survive on just one customer. It's not, from an investor's standpoint, having just one customer is a massive concentration of risk. So as an investor, if I were to look at a company, even no matter how great the customer was, if it's their only one, if they lose that customer, they cease to exist. So they need to work on building out their customer base. So that's the first thing. If we go back to February 24th, Workhorse provides a corporate update. So on February 24th is when they let the world know, hey, we didn't get the post office contract, but we are going to continue to pursue this matter. So that was on February 24th, and then the update was on June 16th. So my biggest issue with this company right now, and again, this is fixable. We'll talk about solutions. I think that they're moving towards solving a lot of these problems. And what I'm hoping is that over the course of the rest of the year, we'll see this unfold and that management is doing what I'm thinking, and we start to move in the right direction. Between those two press releases, they've gone kind of radio silent. They've done a few small things, but they're not controlling the news and they're not controlling the narrative on this company. By going dark, it leaves investors with doubt. and fear and questions. So one of the things I like to see is a company's investor relations and their internal press releases. This is one of the ways they can try and drive the conversation surrounding their company. On April 21st and on April 26th, they added a few new members to management. So these are positive press releases, one of which I think is a critical position. First and foremost, this is a EV company. This is a last mile delivery electric vehicle company. So what they have done is they've created a new position, and it's the president of commercial vehicles. This person will be in charge of the commercial vehicle division, including production. So I want to talk about production. It has been a big problem. They need to bring somebody in. This is a person with experience. They need somebody to laser focus on this and solve their problems. They've talked a lot about, the supply chain disruption, and certain things have slowed their production down. But at some point, when you take a look at their numbers, you're going to see they've got to do better. Just as an aside, do me a favor, and if you enjoy this video, please smash the like button and subscribe to the channel and ring the bell so that you don't miss any videos in the future. So let's take a look at their numbers. This is from the press release for their first quarter 2021 earnings. In here, the first thing they say is they produced a total of 38 C-Series vehicles year to date, more than doubling the number produced in comparison to the combined previous 3 quarters. I don't like that sentence at all. Saying that you more than doubled the 3 quarters before that with your 38 vehicles produced is a not very good statement, followed up by an even worse one, right? 38 vehicles. They need to be in the thousands or tens of thousands of vehicles. And they're saying that in the first quarter they produced 38. That kind of rounds down to 0, right? They were looking to get a contract with the USPS for 165,000 vehicles. I suspect one of the reasons that they lost that contract was their inability to produce. They've had a lot of delays in production, and you can see to this day, if you add it all up, that means they're maybe at 50 or 60 vehicles produced ever. They have the facilities to do it. They have massive facilities. They're set up to go. Something's gone wrong with their production. They've changed their estimates, and they've kind of given a little guidance on this. So let's take a look at that. Okay, later down in this paragraph, they say, we are adjusting our 2021 production estimate to 1,000 units. Our deliberate approach to grow will ensure we are well positioned to deliver the increased volumes we expect in 2022 and beyond. Okay, so now at least they've given us a benchmark. They're looking for 1,000 units this year. That's an adjustment down. It's an adjustment in our expectations, but at least it's information. So the worst thing is to leave a void, and that's why, I'm talking about they've kind of gone radio silent here, and that's not helping investors. All right, I want to take a quick look at a press release they did on January 4th, 2021. So this was prior to all the press releases that we just talked about. Workhorse receives purchase order from Pride Group Enterprises for 6,320 C-Series all-electric delivery vehicles. These are to be delivered starting potentially in July of 2021 through 2026. So it's about a 5-year contract for over 6,000 vehicles. This is a press release. This is the information that investors need to see in order to understand that this business is making progress. So this is their unaudited first quarter balance sheet. So you can see they have $205 million. Their current liabilities. So I like to take a look at cash versus current liabilities because we want to make sure this company is viable. If they're in a cash crunch or a cash problem, that creates an entirely different problem as an investor, in that they're either going to need to borrow a lot of money or create dilution in their stock through issuing shares of stock, or worse yet, they don't find a solution to their cash problem and they go out of business. So at the moment, they're not staring that in the face. They do have $205 million in cash. That's not going to last them forever. We do need to see progress on this matter. What I would expect is if they can generate some positive news, get into a better cycle, have their stock heal and recover to a more appropriate spot, they may need to do another offering. But I would not expect it at these levels. Doing an offering, we'll look at their chart, but they're trading around $11 right now. That is an awful place to have to do a stock offering. They don't need to do one yet. Enough said. So having said that, let's take a quick look at the chart. I don't want to overcomplicate this. You'll see I've drawn two yellow lines. Right now, this stock is trading at $11.26. So there's a line in the neighborhood of $11 that has been pretty healthy support. You'll see it did break below that line for a short period of time. So this yellow line spans from March through July. So that's a fairly significant period of time. It has been tracking between that, just under $11 and just under $19 is the yellow line on the top. So it's got a healthy trading range. If you're a short-term investor or a swing trade investor, it is sitting here near the bottom of this trading range and it's holding. I would think this is a good entry point to buy into the stock. If you're a swing trader, maybe you're looking to buy here and, maybe you see it go up here and you sell right here. I'm more of a buy and hold investor. So, this does look like a good entry point if we believe the things we just talked about, if we believe they are solving their production problems, if we believe they're going out and getting more sales, they have the cash to get them, enough time to do so. All the pieces are in place for this company. There's another thing going on in this stock. As you all probably know, this is one of the most shorted stocks in the entire stock market. There's 39 or 40 million shares short right now, which represents about 32% of the float. So that is massive. So that is one of the things that is driving this price abnormally lower than I think it should be, is a gigantic short interest. If they can start showing hard purchase orders, deposits, they've got the production facilities to facilitate all the sales to get them back up to a $3 or $4 or $5 billion market cap company. They're just not doing it right now. They're trading somewhere between $11 and $19 fairly consistently over the last 4 or 5 months. That's a potential almost double right there just to get to the top of their trading range. As you can see, they've traded much higher than that in the past. So I don't want to speculate. I don't have a crystal ball. They were over $45, it looks like, back in January and February. Maybe they'll get back to there. It would take a lot of good news. So my opinion is that, this is a buy and hold for me. That's it for Workhorse. Leave some comments below and let me know what you guys think. If you have any more information, that's great. Again, do me a favor, smash the like button, subscribe to the channel. Thank you so much for watching, and we will see you in the next video.